Hey there, traders, and welcome back for episode 109 from the StockBandit.tv. It's a place you can always find trading videos to make you better. And as we head into a brand new week of trading, I want to just pause and take a good, solid look at the major averages. That's a place I always begin my trading week. I want to know what the key levels are, as I know that as those are crossed or broken, that individual stocks are likely to follow along, and that's what's really going to help me the most in my trading in the week ahead. So this next week, we obviously have a shortened week of trading. We only have 3.5 trading days as opposed to the typical 5 that we see. The market will be closed on Thursday for the Thanksgiving Day holiday, and then it's only open a half a day on Friday, with it closing, I believe, at 1 o'clock Eastern on Friday. So be aware of that, obviously, for the days that you'll be trading, but more importantly for the lighter volume that we're going to see as the week progresses. Now, typically the lightest volume days of the year oftentimes will come during the July 4th holiday and the week of Thanksgiving. Lots of traders will be traveling. Obviously, you know that Thanksgiving week is an extremely heavily traveled week, and so that means people are not at their screens, they're not trading at full speed, and that definitely is important for us to take into consideration, because we know that the volume is likely to be lighter, and therefore the moves may not last as long as they could if they really had some good fuel behind them. So be aware of that in the week ahead. Trade a little bit lighter, probably look to shorten your time frames a bit, and just trust that it's okay to do a little bit less this week as opposed to what you may normally do with your trading. So let's take a look at the indices here. Up first is the NASDAQ. Well, last week we did spark a breakout to the upside, and then we did roll right back over and give it right back. So we saw the NASDAQ and the S&P each finish the week in negative territory, whereas the Dow did post a minor gain. But all in all, we're really stuck in a short-term trading range here. The overall trend is still up. We still have been making higher highs. Obviously, the highs last week marked the highest level that we've seen the market reach this entire year. So obviously, those are the best recovery levels that we've seen from the lows back here in March, and that's certainly worth noting. But for the NASDAQ, there are a couple levels that I'm really taking a look at here. The first one is an unfilled gap right here that extends down to about 21.12. So if we do see last week's pullback persist and see some follow through, I would not be surprised to see that gap get filled before some buyers may look to step back in. However, if they do step in before that level is reached, we do also have an upside gap, which is unfilled from Thursday of last week, and that extends up to about the 21.93 level. So we've got the highs up here at the 22.05 area, and obviously we're still hovering near this 21.50 zone. We finished just a few points shy of it last week, so we've got some key levels here. What I'm going to be looking at here is these two unfilled gaps, and then of course the highs right up here. So for the NASDAQ, that's the levels I'm keying the most off of in the days ahead. For the S&P 500, this index also has a minor gap down to about the 1069 level. So here again, if we do continue to drift lower, I would expect to see that gap get filled. That gap is not as pronounced as it is on the NASDAQ, because on the NASDAQ, everything is electronic and everything opens and begins trading at 9:30 Eastern. For the S&P 500, a lot of these stocks are listed on the New York Stock Exchange, and with the specialist system, we do know that some stocks will open 1 or 2 or 3 minutes after the bell. They're sometimes delayed when they begin their trading a little bit, and so what we get is a little bit more of a gradual opening for the S&P and the Dow, whereas the NASDAQ is likely to gap a little bit more. So that's just a brief explanation of that. But this gap is about the 1069 level. Then, of course, we've got the highs up here at 1113. So those are the two levels I'm looking at here. Once again, we find ourselves in a bit of a short-term trading range here. So don't be surprised if that happens to persist in the days ahead. And then for the Dow, I'm really just watching this same level right here, this 10,120 that was resistance back here during October, and the highs right up here at the 10,438 area. So, we're kind of consolidating a little bit here. Not a real well-defined side has momentum at this point, and so we did pull back slightly on Friday. It was an inside day, but it came on bigger volume. So mixed signals here. Overall, the trend remains up. I want to be mindful of that, but we do have some key levels there to take a look at in the days ahead. So thanks for joining me once again for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.